Laura Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hey, hello everyone. Good morning. How are you? Say hello if you can see me, hear me. Yeah, my camera vision looks a little different today. I've got to fix that. It's less zoomed in. But good morning. Let me know if you can hear me, see me. Give me 1 second. I'm just going to raise my chair a little bit. I have not gotten shorter. It's just my Zoom must have been messed up because I've been fiddling around with my camera this weekend, but I did not get shorter. Let's see if I can move this down a little bit. I think it has to do with this. All right, fantastic. Oh gosh, it's moving. Hold on, just give me 1 more second. All right, how is everybody doing? This is can you believe what's happening to my camera? All right, I got to fix that later. But this is probably the most important Monday live stream we've had all year because we've got a really big event ahead of us and there's going to be a lot going on in the markets. And I am so excited about what I'm going to be sharing with you today because I think it's some very good information that I think will really help you prepare on about how to trade the FOMC rate decision this week. Because as you know, the Federal Reserve monetary policy announcement is hands down the most important event risk on this week's calendar. Now, of course, it is not the only event risk. You know, I always like to get all of you involved. So I will be asking you to help me build out the list of different things that you need to be watching this week because I want you to be fully aware of everything that could be that's on the calendar, that could come on the calendar, that we should all be watching. So before I begin, I'd like to, welcome any newcomers here. If you're brand new to our live stream, let me know, say hello. Let me know that you're new so we can pay a little bit more attention to what your questions are. So let me know if you're new. Raise your hand, say hello. Good morning, Laura, Bob, Tony. These are all my old dogs who come every single week. So I'm happy to have you here. But as I said, this is the day where we're going to talk about all of the interest rate decisions along with, how to trade them, what to expect for stocks, gold, as well as Forex and the US dollar. So there's definitely a lot going on in today's session, but say hello. Let me know if you are brand new. Okay, so what we're going to do is we all know that the Federal Reserve's monetary policy announcement is hands down the most important event risk on the calendar, but it is not the only event risk on the calendar. It's not the only thing that could move markets. So I want all of you to help me and type into the chat, build our list. And I've got 8 things this week. And maybe, it might not be the most comprehensive list, but I think it is. The 8 things that that we all should be paying attention to and watching this week. What are the 8 things that you think that we should be watching? And I'm going to share with you my screen while you start typing away so we can build the list together because that I love to draw on my charts. So give me a second. The Federal Reserve monetary policy decision is the easy one. So you're going to have to give me more than that. So give me 1 second while I share with you my screen. All right. Share screen. Entire screen. Here we go. All right. We're going to build out the 8 things, 8 events to watch this week that will affect markets. All right. What do we have? So we have obviously the Fed, right? Easy there. SBK is ready right ahead of all of us. But the one thing that I wanted to showcase is what many of you is saying, and I hope that most of you are aware, is that tomorrow we have the JOLTS. JOLTS is very, very important because JOLTS measures job openings. And these, since we don't really have the non-farm payrolls report, or a lack of really material data going into the Fed meeting, these are the numbers that will matter, that will help shape not necessarily the Fed's decision, because I'm pretty sure they've made their decision, but it will help shape the market's decision on what the Federal Reserve can do. So yes, Fed, the JOLTS, where's SBK? He's put together a pretty good list here. So yes, we've got the RBA rate decision, the Bank of Canada rate decision, the Swiss National Bank rate decision, and what else? Okay, we're going to bucket the press conference with the Fed rate decision. Jobless claims. Yes, we've got jobless claims. You guys are making my job so easy today as we build this list. Let's see. You guys are missing one couple of things. We have ADP. So I'm going to add a bonus here. It's actually going to be 9 things because there's one thing that, well, no, it's going to be 8 things. My friend here said that we should be watching for any comments from UIDA, but sorry. You guys are so excited. You have so many chats here. But I don't think that we're going to really hear from UIDA this week, but we'll see. We definitely have to keep an eye on UIDA, but there's one more thing. We're going to change this to 9 things to watch. That's why I love you guys, because you're helping me build my list on any comments from BOJ, UIDA about comments, about rates. Okay, what else? China inflation data is so. I don't think it's going to be that important. You're missing one thing. One thing that you may not be aware of. Thank you, Paolo. So OEDA is going to speak in London. So yes, we do have to pay attention to that. There's one more thing. What do you think is the 9th thing that you should be aware of and should be watching that is not related to, that's not included in the Fed rate decision? Whoever answers it right is going to be the MVP of today. Let's see. Who's going to answer this right? No one on Instagram is answering. I'm going to give you 20 seconds. You can write question mark if you have no idea. That's okay. But this will be very, very important. And so this is basically, the dot plot is going to be attached to the Fed. We're not getting NFPs. It's going to be the Q3 employment cost index, which is coming out on Wednesday before FOMC. So this is important because it basically measures wages. And so this, yes, I'm going to do exactly that, Matt. I'm going to explain market behavior during these events. But Q3 employment index will also be very, very important because this measures, it's kind of like a measure of inflation. It's a kind of measure of the labor market. It's a kind of a measure of growth. So in many ways, there's a lot encompassed in this Q3 employment cost index. So these are the 9 things that are market moving that you need to be watching this week on the calendar. And so, hopefully that gives you a bird's eye view of what you need to be paying attention to. Now, of course, the number 1 is the Fed. And with the Fed, you guys have so wisely pointed out, we've got the dot plot. We've got the rate, the actual rate change. We've got the economic projections. Let's get this on line 2, economic projections. And we've got Powell's guidance. There are 4 components to this week's FOMC rate decision. And all of this is important. And, how the market moves is going to be hinged upon every piece of this, but also hinged upon what the market expects, what is already priced into the trade. So we know that these are the 4 things that that we need to watch. Now, I'm going to do a quick survey. I want you to type into the chat whether you think we're going to get a cut or no cut from the Federal Reserve. Just type quickly, cut or no cut from the Federal Reserve this Wednesday. Are we going to get it? While you're doing that, I will let you know that this is the reason why we're getting so many different components of the Fed rate decision is because this is one of their quarterly meetings. 4 times a year, if we look at the Federal Reserve, 4 times a year, they produce, they have a meeting where we got a little bit of an asterisk, which means that we get the summary of the economic projections. We have it in December. The last time we had the economic projections was in September, and then in June and in March. These are the most important rate decisions because this is where the Federal Reserve, they do all their work, they crunch their numbers, they spit out, their economic projections to justify changes in interest rates. And that's part of the reason why the very first interest rate cut of this cycle happened in September. It's no coincidence that it happened at a meeting with an asterisk because they did all their work to crunch all of their numbers to justify the move that they took in September. So this is one of those meetings where it's very, very important, where they crunch a lot of their numbers in order to make their decision. Now, of course, their job is a little harder this month because there's a lot of numbers that were unavailable. And so that may come into play as well and affect some of the things that we have. But let's see what you're thinking. All right, so I'm looking at, most of you are saying cut, 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 cut. So pretty much all of you are saying cut. We have SS saying 50 basis point rate cut. Peter is coming out there with a bold call saying no cut. But it looks, we've got more. Mad says no cut. Paolo says no cut. So it looks like 70% of you think there's going to be a cut and 25% of you think there's going to be no cut. And yes, I'm going to explain all this, where this is the layup because it's important for you to understand. So the majority of you think that there's a cut. The minority of you think there's no cut. Well, let's see what the overall market thinks, because this is what is the most important thing, which is what the overall market thinks and what is priced in. So if you're new, what we do is we always type in CME Fed Fund Futures into Google. First link, Fed Watch. And then we get this beautiful table here. And this table shows you what's priced into the market. So right now, the current interest rate is 3.25% to 4%. So the current interest rate is 3.25% to 4%, which means that the market is pricing in a 89.6% chance of a 25 basis point cut from 3.25% to 3.5%. And this has actually not changed much because if you look at this, throughout the course, even last week, we had 86%. A month ago, it was 67%. It is actually quite remarkable that this hasn't changed because if you remember last week, we had a very, very good jobless claims report. The best jobless claims report we've had in a couple of years, I think 3 years. So it was a really, really good number. And many people thought that this would actually drop these expectations from 89 to maybe 80 or maybe 70 something, but it didn't change at all. So clearly the market is convinced that the Fed is going to cut. Most importantly for us as traders, the big takeaway is that the market is positioned for a cut. So if the market is already positioned and discounting a cut, the question really is, where is the surprise? What is, where can we actually surprise? Well, let's talk about that, right? So as we said, I'm going to delete this. We have a couple things going on with FOMC. We've got the rate decision, which and we'll break these all down. We've got the rate decision. We've got the dot plot. We've got Powell's presser. And then we have the economic projections. So let's break down how each of these could affect the trade. So rate decision, I already showed you. The market already thinks that the Federal Reserve is going to cut interest rates. There's an 89% chance of a rate cut. So if they deliver a rate cut, that won't be enough, right? The market won't, a rate cut itself will not be enough. The question is, if they deliver an interest rate cut, the question immediately goes to, what is the dot plot? What is the Powell going to say? What is the economic projections? Now, of course, the big surprise would be no rate cut. If there's no rate cut, you can instantly expect the dollar to rally, stocks to fall, and gold to fall. Now, I'm going to move this over. All right. Now, this one should say 25 basis point rate cut. If we get a 50 basis point cut, then that's going to be very, very dovish, right? So that's going to be bearish for the dollar, positive for stocks, and positive for gold. You're absolutely right, Fred. The votes will matter too. That I've actually forgotten about that. Thank you so much for telling us. To remind us. So let's add this over here. We're going to add this to 2, the votes. All right, because remember, last time one member, I'll show you in a minute. Thank you so much, Fred. You're actually our MVP. Let's all give Fred a clap, because I actually I'm so into the price action that completely slipped my mind, and I'll be the first to admit it when I forget something. So actually that's not what I want. So one member, if you remember, this is where the votes come in. Voting for the action. Last time they cut interest rates by 25 basis points. I see no claps for Fred. All right, let's clap for Fred. All right, let's make sure we give him a thumbs up. Let's clap for him for reminding us. Because this is, we're working together here. Last time they cut interest rates by 25 basis points. One person, Mirren, who was Trump's nominee, voted for a 50 basis point cut. One person, thank you so much, Fran, Ben, Schmidt voted for no change. So very, very important. And, Fred pointed this out. So what are the votes? Well, if we get a 25 basis point rate cut, the immediate question will be the votes. What is Mirren voting for? What is Schmidt voting for? Will it be a unanimous decision? That will decide whether or not we get the dollar rallying or falling, stocks rallying or falling, and gold rallying or falling. So the question is, will it be a hawkish cut or a dovish cut? Now, so here, remember the last meeting, one vote was we had one 50 basis point vote and one no change. So it's going to be really, really important. And so all of that, 1 and 2, happens right at the 2 o'clock rate decision. So right at 2 o'clock, we're going to get 1 and 2, and that's going to be the instant reaction. In addition to 3 and 5. So at 2 o'clock, and this is very important because timing also really matters. Let's kind of move this. So basically at 2 o'clock, we're going to get the rate decision. We're going to get the votes. We're going to get the dot plot, and we're going to get the eco projections. At 2:30 p.m. Eastern time, we're going to get the presser, and which basically is the guidance. All right. So back to this. We've got 25 basis point rate cut. The first thing is, where are the votes? If it's the same, then it's going to be based upon, everything's going to hinge on the dot plot. If it's a unanimous, then same thing. It's all going to hinge at the dot plot. So this is very important because back in September, when we had the dot plot, by the way, who has no idea what the dot plot is? And you want me to explain what this is? If you do, write some question marks. Otherwise, I'm just going to move on and assume that you know what the dot plot is. But if you want me to explain what the dot plot is, put some question marks in the chat so I know that you want an explanation. So the last time we had the dot plot, they were looking for 2. So back in September, they were looking for 2 rate cuts. Good. I love your question marks because it gives me an opportunity to explain what is the dot plot. Basically, and I'm going to show you this quickly because I don't want to confuse you, but I'm going to explain it to you in a much more easy to understand way. So the Fed comes out in economic projections, and then they come out with this thing. This is called the dot plot, all right? And you really don't need to worry about it because if you are on social, like if you follow Financial Juice, or something like that, they'll tell you what the dot plot shows, in terms of what the market is pricing in. But this is, each dot represents a vote from a Federal Reserve president, and they're broken up by year. And so it says, what do the Federal Reserve presidents think is going to be the average interest rate in 25, 26, 27, 28. We only really care about the next year, which is 2026, because, the whole world could change in 2027 and 2028. So the question is, where is the biggest grouping of the dot plots? So back then, the interest rate was, it was before we had the interest rate cuts. So it was like 4-ish%, and it was about 4%. So the market was looking for basically in 2026, interest rates to basically have 2 interest rate cuts in 2026. So the question will be for this dot plot. Where is this? The dot plot. Back in September, the market was looking for 2 rate cuts in 2026. So now in December, what will the dot plot show? Will the dot plot show still 2 rate cuts? Do these Federal Reserve presidents think that there'll be 2 rate cuts, or will there be 3 rate cuts? If the dot plot moves to 3, that is going to be this. If the dot plot moves to 3, it's going to be bearish for the dollar because it's being more dovish, positive for stocks, and positive for gold. If we stay at 2, it's going to be bullish for the dollar, negative for stocks, and negative for gold. Now, the next question to ask is, what does the market think? What is priced in? Let's go back to CME Fed Fund Futures. Where is this? Let's go to Google. By the way, we will be live. We're probably going to be doing a stream. Boris is probably going to be live trading this on Wednesday. So make sure he's shaking his head to me. Make sure you join us on Wednesday if you want the live trading and the live breakdown of what this all means. I'll be on there as well to talk about all this. So make sure you join us for live trading FOMC on Wednesday. So what is the market pricing in for 2026? Remember, current interest rate is 3.25% and 4%. So the market by the end of December, by the end of the year 2026, the market is pricing in a 70% chance of interest rates being 75 basis points lower, which means if we get one this week, that'll be 2 more interest rate cuts in 2026. So right now, the market also agrees that there will just be 2 interest rate cuts in 2026. Of course, as you may or may not know, and I hope you'll all know, that this can change a lot. All of this changes a lot throughout the course of the year. December 2026 is a very, very long time from now. But as of right now, the market is pricing in a 70% chance of 2 interest rate cuts in 2026. What about January? That is kind of the most important thing. Will the Fed cut in December and then pause in January? That's certainly what the market expects, because the market right now expects that interest rates will drop that there will be in January, at the January meeting, a 92% chance that interest rates, actually no, a 70%, I'm doing my math wrong, basically a 78% chance that interest rates will be unchanged. I mean, some lunatics think there's going to be a rate hike, but we'll leave it be. I'm not going to comment on that. But the market is thinking that interest rates will remain unchanged in January. And a small minority, only 20%, it thinks that there's going to be another 25 basis point rate cut. So expectations, I always talk about how what's priced in and expectations matter a lot. And it's very important for you to realize that right now, going back to this, with the dot plot, the market does not expect, the market does not expect this. I'm putting an X. It does not expect this. Okay? It expects this. 2 rate cuts in 2026. So if the market expects 2 rate cuts in 2026, then it comes down, then if that happens, we'll probably see the dollar rally, stocks fall, and gold fall. But of course, Powell's presser is also going to be very important. Powell speaks at 2:30. What are we thinking at 2:30? It can go one of 2 ways. He's either going to be wishy-washy and say, they cut interest rates and they're in wait and see mode. They haven't, gotten all the data since the U.S. government has reopened, and basically be non-committal about future interest rate cuts. If Powell's non-committal, then this is what's going to be reinforced. If he's dovish, then it's probably going to be a little bit more like this and build expectations for 3 rate cuts. Economic projections will also matter, whether the Federal Reserve overall reduces or raises their GDP, unemployment, and inflation forecast, that will matter as well. So that's all very, very important. And these are all the things that, the market that we're going to lay up going into the rate decision. Now, whenever we have rate decisions, I always like to build this table here that gives you a bird's eye view of how the economy has changed since the last central bank meeting. And since the last central bank meeting, overall, you can see the table looks smaller than it normally does because we don't have a lot of data at hand. But overall, what we do have, and it's kind of old, it's from September, so you can't really rely on it. Retail sales was weaker. Consumer confidence is weaker. Non-farm payrolls was good, but the unemployment rate increased. Earnings declined. Housing market data has been weaker. ISM numbers have been weaker, although services were stronger. But overall, more red than green, which is the reason the case for a 25 basis point rate cut is pretty strong. So there's definitely a very strong case for a 25 basis point rate cut. So, for those of you that are just joining us right now, a bunch of you just joined, we laid out everything that you need to watch this week and all of the potential impact of the Federal Reserve rate decision. So make sure you rewatch the beginning because that is very, very important. Because, this is what you need to know. Now, the question is, how will the markets react? So we already talked about how chances are there's a very good chance that we're going to get a 25 basis point rate cut. The votes probably won't change that much. We're probably going to get this. Sorry, I'm trying to highlight it, but it's not working. This scenario over here, 2 rate cuts expected in the dot plot, which will probably lead to the dollar rally, stocks falling, and gold falling. And, taking a look at dollar yen, first of all, you can see the dollar yen had sold off going into, and this is just indicative of the dollar in general. And we can change this to the dollar index, but I like dollar yen. It's sold off going into the rate decision, rebounding a little bit today. And you can see from the BK trends meter that most of it, that's turning green and it's turning a little bit bullish, which means that the market, it's already sold off. It's already shaking off a little bit of its negativity. So, how did it behave last time? In October, there were 2 rate decisions because the Federal Reserve had its first interest rate cut in September, followed by the follow-up move in October. The last time was October 29th. So let's get our chart here. So the last rate cut was October 29th. All right. So this was October 29th. And look at this. Fed cut interest rates on October 29th. And even though the Fed cut interest rates October 29th, what did the dollar do? The dollar rallied. It did not fall. It rallied. And let's take a look at their very first. So the Fed kicked off their very, very first interest rate cut in this whole cycle, which would be super, super dovish, on September 17th. Which, dun, 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 is the low in dollar yen, leading to also a rally in the dollar. And this is with the context of both times the Federal Reserve was probably going to cut again. So considering that this time they are not expected to cut again in 2026, what do you think is going to happen? Do you think it's going to be that history will repeat itself? When, and let me repeat this again, they cut the last 2 times and the market expected them to continue, the dollar still rallied. So if they cut this time and the dollar, and they're probably going to pause in January, what do you think is going to happen? Type into the chat box. I need a sip of water. What do you think is going to happen? Do you think the dollar is going to go up, or do you think the dollar is going to go down after this rate decision? Of course, we can't predict it 100%, but, applying logic, applying history, do you think that the dollar will rise or fall? Or do you think the dollar should rise or fall after this Wednesday's rate cut? Oh, we've got SSS down, and Forex, and let's look at the dollar index. A lot of you say down. Why are you saying down? Are you saying down because you are being, look at this, my BK trend meter shows that even though dollar yen's up, everything is down. What is this BK trend meter? I have an EMA and an SMA meter, and it just gives me a bird eye glance. What's going on in the markets. If I'm trading the euro dollar, for example, I can see that everything is green. But what I want to show you is sometimes things will change. Like, let's get rid of this. Right now, NASDAQ's green. Sometimes you'll have like sort of some of the 5-minute and the 15-minute change it. And when it starts to change, that's when it tells me that the momentum is no longer strong. But right now, everything is still green. But we're looking at the dollar index. So we're looking at the dollar index. It's still super, super bearish. And by the way, you can get the BK trend meter completely free if you, buy a Think Capital or a breakout prop account, or buy a prop trading account with any of our sponsors. We're giving you this for free. Just send us the receipt. Make sure you use our link, and we'll give you access to this. So let's take a look again at the BK trend meter. At the dollar index, October 29th. Okay, my friends, look at this. October 29th, beginning. This is the 29th of a huge dollar rally after the last interest rate cut. And then September 17th, beginning of a huge dollar rally after the interest rate cut. Why in the world are you all saying dollar down? Are you confused, or are you taking a contrarian view that you want to explain? SS, Neil, Martin, I'm calling you guys out. Are you confused, or are you taking a contrarian view? Because if you're taking a contrarian view, I want to hear it. I want to hear why. We want to hear your thoughts on why you are taking the contrarian view. I don't think everyone thinks it's up. I think that right now everyone's positioned down. They're certainly not pricing it's up. We are talking about it potentially being up, but doesn't mean that everyone else is aware of it. I mean, I could be wrong. You could be right. But based upon the price action, the market is not pricing. They're not positioned for up. They're positioned for down. Now, of course, not many of you trade the dollar. So let's talk about how gold and NASDAQ behaved in the last two rate decisions. Looking at NASDAQ first. NASDAQ, October 29th. Okay, where's October 29th? Last rate decision. October 29th, last rate decision. This is it. Hold on. Let me just redraw my arrow here. This is October 29th. Fed cut interest rates October 29th. It did rally that day. It did. If you were long, you maybe got a little bit of a rally. But then what happened? Then stocks fell because, the market interpreted, because yields did rise, and then marked the top in the NASDAQ back. The rate cut marked the top in the NASDAQ. Part of this was because at the time it was perceived as a hawkish cut because one member actually voted for no change. And that's why stocks topped out. September 17. Where were we? September 17. Where are we? September 17. Fed, remember, September 17. Fed cut interest rates for the first time in the cycle. Crazy two-way action. Stocks first dropped, rebounded, and then rallied. So, we're 2 for 2. One's down, one's up. Although this down, it did head down before up. So I wouldn't make too much of it. But I do think that, if it ends up being a hawkish cut, it's going to be negative for stocks. If it's a dovish cut, it's going to be positive for stocks. So that's really going to be the indication. So while there was a clear trend in the dollar, the trend in stocks is not so clear. What about gold? All right, let's look at gold. So October 29th, this is gold. October 29th, this is gold, marked the bottom in gold. And gold rallied. No surprise because gold is priced in dollars. So if dollar rallied afterwards, no surprise that gold rallied as well. And then September 17th was our last meeting. Before that, the very first interest rate cut. Market was a little confused. That day, gold fell a little bit, but then ended up the fall was very limited because gold is unable to fall if the dollar is selling off. And so in the time dollar rallied, and so gold fell. But eventually gold went on a fantastic uptrend because the Federal Reserve kicked off the cycle. So once again, gold in both cases rallied, which is kind of interesting because the dollar rallied and gold rallied in both cases. So, where's gold right now? Gold consolidating. It's waiting for FOMC, both in October and in November. Even after a little bit of uncertainty, gold ended up rallying in both cases. Not sure if it's going to happen again, because this could be the beginning of a pause, but history suggests that rate cuts do drive gold prices higher. Bitcoin. For those of you that are interested in Bitcoin also has a very clear trend, because Bitcoin is related to risk appetite. So October 29th. So while the direction in the NASDAQ and gold may not be so clear, Bitcoin had a very bearish day on October 29th because, the hawkish cut is negative for risk appetite, which is negative for Bitcoin. And then also on September 17th, let's look at September 17th. September 17th is, where am I? September 17th is over here. So September 17th, we had also a bearish day for Bitcoin. Took some time for it to figure out what it wants to do, and then it crapped out. But because Bitcoin is a very, very sensitive asset to risk appetite, whether stocks fall or not, if we do get a big drop in stocks, this is going to be a natural move lower. So, not many of you dabble in crypto because you don't know how to, but breakout prop is a really, really good way to do it because you can get funded on one trade. There's no consistency rule, and they're backed by Kraken, and you can start with as little as $50. And with our code BKSAVE, you can get the best discount that they'll ever give, and you will also get our BK trend meter. So they're one of our sponsors, so we're highlighting them. If you do want to trade Bitcoin, don't do it in your wallet because it's much better to lose $50 and have $50 at stake than $1,000 or $2,000. So if you think that that the Fed is going to do a hawkish cut, that's going to be bearish for Bitcoin. And you can see my BK trend meter starting to turn bearish, even though it's an up candle, telling you that on an intraday basis, Bitcoin, while it looks like it's up, is actually turning down. So it could start to move lower. Breakout prop is the way to go. And you get these BK trend meters for free as well. All right. So we talked about how the markets could move. We really broke this all down as much as I could. This is, so now let's talk about some of the other rate decisions before we roll into live trading with Boris. So we've got 3 other rate decisions this week. We have the Reserve Bank of Australia, which I actually wanted to talk about because the Reserve Bank of Australia could actually be at the cusp of an interest rate hike. Not this month, definitely not this month. They're not looking at an interest rate hike this month. Let me see if I can bring down my table. But look at this, my friends. Look at this. What does this look like to you? Unlike the US, which is a sea of red. The US is a sea of red. This is very much a sea of green, right? They had really, really good household spending numbers, fantastic household spending numbers here. And really good labor market numbers. Last labor market report was really, really robust. 55,000 jobs created. Someone asked earlier, what about those really strong Chinese numbers? Those really strong Chinese numbers are filtering through really, really strong Australian numbers. It's benefiting Australia. Inflation's down a little bit, but still, 3.8% for inflation, 4.5% inflation on expectations. These are like most central banks want their inflation around 2%. These numbers are way too high. 4.5, 3.8, they're way too high in a growing economy. And so this sea of green is exactly what Paolo's suggesting. Australia is not missing a beat. So what I'm trying to say is that RBA is not expected to change interest rates tonight. They meet tonight. But there's a very, very good chance they could start to lay the groundwork. I don't know if it's going to happen today or tonight, but they could start to lay the groundwork for an interest rate hike. And so, that could be very, very bullish Aussies. Let's take a look at Aussie. Aussie has had already a really, really strong uptrend. BK trend meters are really, really positive. Now, obviously, I would never recommend buying. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight days of gains. I definitely do not recommend buying into 12 straight days of gains. It's begging for a drop. I mean, I don't even know when the last time we had such a strong, continuous move. I mean, it must be years since we've had. This must be the longest stretch. I don't even want to waste your time, but this must be the longest stretch of Aussie's gains that we've seen in I'm going to research this later, but this is the longest stretch we've had in continuous Aussie gains in a very long time. I definitely do not recommend buying it. And this is actually a little bit of a bearish candle. If my trend meters start to turn red, for those of you that are scalpers and day traders, you could definitely short it to downside a little bit. But overall, the point I want to make is that it's probably a buy on a dip, especially after the rate decision. I'd be looking to buy in a dip. But right now, there could be, if my trend meters, especially on a 5-minute basis, this shows you where the 8, 21, 50, and 100 SMAs are. Let's see where the EMAs are. Let's see where the SMA meters are. I'm going to pop up my BK SMA meter. We're going to move this to the bottom. And you can customize this to anything you want. You can change it to any SMA or EMA meter you want, any number you want. And so it's very, very useful. Let's see what the SMA meter is showing us. SMA meter is showing a little bit of a shift on a short-term basis. But once it starts turning red, I think, that's when this is how you can use it. That you can probably use it for a little bit of a dip down to 66 even, and the uptrend will be intact. So these are very, very valuable. And once again, you get this with, Think Capital, prop account. Think Capital is broker backed by Think Markets. You can trade directly on TradingView, and they give free demo accounts, which is incredible. A lot of them don't give free demo accounts. So there's a lot of really, great things about Think Capital. A lot of our traders are trading with them. Make sure you use the code BKSAVE for 25% off Think Capital. You get 25% off, and you get these BK trend meters for free. So they're also one of our sponsors that make this video possible. All right, so RBA, possible rate hike with sea of green. But I'd be more of a buy and dip because I think it's going to pull back. The last one is going to be the Bank of Canada rate decision. So Bank of Canada is right in between. Bank of Canada there's green and red. It's not like RBA or Fed where it's either sea of red or sea of green. Bank of Canada has red and green. They're expected to leave interest rates unchanged and probably not, provide much guidance. I think they're going to remain dovish. I think they're going to leave the door open for additional easing if needed. But this one, I don't think we're going to expect much, although the guidance will really, really be important. And then, of course, we also have the Swiss National Bank. They are not, they're reluctant to take interest rates below zero. Interest rates are already at zero. So I don't think they're going to take it, much further. And so I think, dollar Swiss, euro Swiss is going to trade exclusively on the market's appetite for US dollars. So that, don't be mistaken, dollar Swiss is going to move completely on the market's appetite for US dollars. So those are the main events. There's other things obviously on the calendar that's worth watching. Like, for example, we have JOLTS tomorrow. We did have really good Chinese numbers. Tonight, we have Australian business confidence. We have the Australian rate decision. Tomorrow, we have the German trade balance, the industrial production, and factory orders numbers from Eurozone have been really good in general. Eurozone data has been very good. Tomorrow, we do have the JOLTS and the ADP, which is important. We have Chinese inflation data, which some of you asked about. I don't think it's going to be market moving at all, but it will be important for China, obviously. We also have the FOMC rate decision and the employment cost index. It's red on the calendar, telling you it's important. BoC rate decision on Wednesday, FOMC rate decision on Wednesday. Wednesday night, we have the Australian jobs report, very important. SNB rate decision on Thursday. Jobless claims from the US on Thursday. New Zealand data PMIs, UK GDP. So a lot going on this week. This is probably the last week of big events before the market starts to slow down. And so it's going to be a very, very important and impactful week. So make sure you stay on top of all of this. And, you know, I think the market's just going to grind until the rate decisions. And that's, you know, so I wouldn't take too much of that. In terms of how to access my ZIP strategy, you've got to be a BK member. You can certainly look at bktraders.com and get information on how to be a BK member. Now, let me open up the floor to questions. Boris, do you want to say hello? Boris we're gonna roll into live trading in just a second.
Hey guys. Good morning. Yeah, Manish, I can't pronounce the name, but if you're interested in ZIP, you can join our BK Traders chat group, our BK Traders website for free, and get the information there. I'm happy to give it to you, or just email me actually at contact@bktraders.com, and I'll give you a special link so you can get a really good deal for a whole year on ZIP. Okay, I'm just put the contact. Any questions you guys have, always email us at contact@bktraders.com right here, and I'm always happy to answer any questions you guys have.
Yeah, so with Think Capital, you just need to go to the website. You don't even have to use our link. Use the code BKSAVE. You get 25% off, and you get the BK trend meters for free. And they're a favorite Forex CFD prop firm for U.S. traders because, you know, we primarily like broker backed. There's a lot of reputation issues out there. Breakout Prop is a crypto-only prop firm backed by Kraken, the largest exchange out there. Think Capital is backed by Think Markets.
Yeah.
We also really like, 8cap just came out. One of our broker partners came out with 1 hour, 4 hour, and 8 hour challenges, which is really incredible.
Yeah.
I think Boris is going to share that with you. So definitely check out that. And the last one, our sponsor that we have is DNAmarkets.com, which you can also use the BK save code is also broker backed, and you know they're pretty great as well. So you know, give it a shot. You know, there's Boris will talk more about prop and why we are seeing so much interest in prop these days.
Oh, all over the place. And more importantly, we obviously have the tools, and I have the tool, man. Do you think I spent the weekend doing nothing? Of course, I spent the weekend improving BFF dots. But the only thing that all of you guys have been asking me for, the one thing you guys have been asking me for, how do I tell range from trend? How do I filter out range from trend? I got the solution for you. So stay tuned for the day trading, prop trading part of the show. It's going to be very, very cool. I'm going to show you all the cool things that I introduced into it. Otherwise, Kay's I think pretty much done with the fund up. We are absolutely 100% going to trade the Fed rate decision at 2 o'clock. Usually, we have gone to this new schedule, which I'm going to post on my Twitter handle and everywhere else, where we're doing triple lives on Tuesday, Wednesdays. So New York open, New York close, Asia open on Tuesday, Wednesdays. But this particular Wednesday, because it's going to be Fed, we're going to do a massive mini marathon for the Fed rate decision, starting from probably around 1:45. Kay is going to walk us through the pre. Then there's going to be the announcement itself, which would be very interesting because I think there's a decent enough amount of uncertainty that nobody really is 100% certain of what they're going to do, right, Kay?
We spent the whole hour talking about this, so I think it's clear.
Right. And then we obviously we're going to have the reaction, which will be very interesting because it'll be interesting to see if the market thinks that this is the end of this tightening, the end of the loosening or not. And I think we'll probably have lots and lots of volatility, which is exactly what we look for in trading. So all looks good. I'm going to let Kay go. Right? Anything else you want to say as a final thought?
That's it. The BK trend meters are really cool. They're very valuable. And definitely take advantage of one of our partners to to trade with.
Absolutely. All right. And of course, I want to put your attention now to, hang on a second, let me just make sure I got this right. Apex has got this huge deal going on. Hang on, let me save. Okay, this is what I wanted to show you. Apex has got this massive deal now going on. By the way, I got my Apex coffee cup. Very, very happy with my swag from one of my favorite prop firms. So their deal right now is, because they had $600 million in payouts, it's a kind of a celebration of the $6 of the number 6, 60% off on everything, and just $6 to enable your funded account. So basically, your all-in fee for any account that you want to try and trade is $84. It's got to be the cheapest all-in fee, I think, of any broker out there. That's going to be till tomorrow. Make sure you guys take advantage of that and nail a couple of accounts and trade with them, because that's a really cheap all-in deal that I think it's really useful. So that's our deal with Apex. Everybody, let me put the Apex link in here for just 1 second. It says 80% off, but it's 60% off. But just use the link to basically get it. Now, how's everybody doing? Everybody having a good day? Good morning. How's your trading been going? Talk to me a little bit. Who's new in the room here? Who hasn't traded with us before? Because I always want to say hello to new people and show you a couple of new things. I'm going to share my screen because I got something super cool to show you. All you guys are going to love me for this. I guarantee it. All right. First of all, screen visible. Nice and sunny. 5 degrees in Michigan. Oh, this is why I used to, we used to work for GFT, so we used to have to go to Grand Rapids all the time, and there was nothing more miserable than going to Grand Rapids in the middle of winter. And they were like, "Oh, it's only 12 inches on the ground." I'm like, 12 inches is not only. Oh my God, yes. I am definitely glad I don't have to make trips to Michigan right now in the dead of winter. But yes, I'm glad you're enjoying your beautiful weather there. If you want some personalized questions, then email them to me. Okay. The only way to get personalized questions is just email them. Don't ask any personalized questions. Also, don't bother me with I can't set up my chart. I can't do that. All of that stuff is personalized. Any questions regarding strategy, I'm happy to answer. And I'm going to dive into the strategy right away. More importantly, who's new here? Who wants me to explain the strategy for them? Who wants me to explain how the strategy works? Anybody? You can also, by the way, let me do this. This is not the latest version, but it's good enough. It's good enough right now for you to get the general idea. I'm going to update this PDF tonight because I put a brand new version of dots up on TradingView, and that brand new version is going. And where's Tony? Tony's here to. It's not a session unless Tony busts my balls on saying that this is the absolute last version, but this is pretty close to the absolute last version of the BFF dots, because it really has everything you guys need at this point to totally get success. Okay, I'm going to explain the strategies. Great, a lot of new people here. Eclectic Mom, nice. And who's this? Halo. Okay, no problem. We're going to explain it all. All right. So first and foremost, in this room, every day, rise or shine, we do one thing only. We scalp. Scalping means we go for super short, super small, very consistent trades. There's a whole bunch of reasons for why we do this, but most importantly is it's the basic strategy which passes every single prop, but of course passes Apex, because we are never ever in a situation where we hit close to drawdown, or we have a retrace on our trades that stops us out. None of that bullshit ever affects us, because we're always selling at the highest possible equity of our account, all the time, and because we take such small risks and such small sizes, yeah, Tony's laughing already. We have the perfect strategy for passing prop. That's number one. Number two, it's a perfect strategy, in my opinion, for just basically trading if you want the least amount of risk with the most consistent behavior pattern. That's why we do it. Now, does that mean, do we make huge amount of money? Absolutely not. We eat like pigeons, tiny little drops at a time. But just like, you can't kill a pigeon. You ever see a pigeon get killed by anybody in the streets of New York? No, they hop away the moment they sense danger. That's how we do it. We may not eat a lot, but nobody's going to kill our account from the way we scalp trade, because we are very, very controlled on our risk. So scalping is what we do. You can use our strategies for much larger, much bigger trades. Absolutely. If that's your personality, go for it. The other main reason is because I am a person with zero patience. Therefore, if the trade lasts more than 5 minutes for me, I'm ready to blow my casket. Our trades will last between 1-2 minutes, sometimes 1-2 seconds if things go right. So that's what we do. How we do this is exactly the strategy that I have for you. The BFF dots only range zone, guys. Everybody new, everybody old, go out there, download the range zone, delete the old one. It should say range zone for you. Okay, this is the latest version, the latest and the greatest version. You're gonna love me for this. I promise you. This one is gonna solve all the last remaining problems of success for us. Okay, so the basic strategy is the following. We have a 200-period SMA. We have an 8-period SMA, short-term against long-term. It doesn't matter about the numbers. Don't get crazy. It doesn't matter whether it's an SMA or an EMA. It doesn't matter if it's a VWAP or not. None of that really matters. All we're looking for is a distinct indication of trend on the 1-minute chart. We're trading the 1-minute chart here, right? And the 8-period SMA is further enhanced by the slope indicator. So when it's positive, it's green slope. When it's negative, it's red slope. Negative slope obviously indicates selling pressure. Positive slope means buying pressure, right? The third thing that is a key component of our structure is the dots. The dots tell us momentum moves. These are momentum candles that end at near-term highs or near-term lows. If purple candle is the earliest indication of selling pressure, the red candle is just selling pressure. So purple, red, early indication of selling pressure followed by selling pressure. White candle is the earliest indication of buying pressure, and then green are all buying pressure. Okay, so white is early buy, purple is early red, white is green is buy, red is sell. That's all it is, right? What is this? Who's this guy? Get this futures. Forex futures DCO. You decided to spam my. All right, you're in heaven. You found the right stream talking my talk. Okay, that's fine. Anyways, the last thing that we do is we have two types of setups, right? Actually, let me get a little bit bigger on the charts. This thing is just, it needs to get a little bit bigger. We have what's called the A setup. That's a pure momentum setup. And the A setup is constructed when we have two consecutive green dots or two consecutive buy dots. It can be white, green, it can be green, green. Two consecutive buy dots create a entry. We go long, we go for 5 points on NASDAQ, right? Two consecutive sell dots over here. I want to show you the good ones, not the bad ones. Here's two consecutive sell dots, purple, red, or red, red, either way. We sell here, we go 5 points, boom, we make money, okay? So that's the momentum setup. Then there's this other setup that we have here, which I do not use. There are a lot of guys in the room who love to trade this. I don't trade this because it's just not my personality, and that's a retrace setup. The retrace setup basically lets us buy at the moving average. As there's a selling pressure, but the price never breaks the moving average, the candle remains green. That's a B setup. We buy here, go long. B setup, we buy here, go long. Conversely, a sell setup. A price is underneath the moving average. The price is a white dot, buying pressure, but it never clears the moving average. We sell on the close of the candle, boom, make money on the scalp down, all right? Those are all the basic setups. And as I said, everything is in that PDF. You can just simply go through it and learn it for free in the PDF. The single biggest obstacle to our trading is this. When things are flowing, when prices are just moving, we got lots of move. We don't care up or down, inside or out, as long as we got 50, 60, 100 point movements in NASDAQ, we're good as gold. We're virtually assured making money, right? When we die is when there is no continuity. When prices go 5 points up, 5 points down, 5 points up, 5 points down, right? The world's greatest churn and burn. And for the longest time, we have struggled with all sorts of volatility filters to try to figure out how we can avoid the churn and burn, okay? And I think I've come up with the cleanest, simplest, easiest way to filter for churn and burn if you want to, okay? And all it is, we did derivatives of moving averages, we did derivatives of candles, all the bullshit. I realized none of this matters. Here's the only thing that matters. We're going to take last 10 candles, and last 10 candles is just the basic default range. You can take more, you can take less, but I think 10 candles is a pretty good indicator of where the vol is. And all we're going to do is measure the high and the low of that range. And if that range is NASDAQ is 25,000 points. If that range is 25 points or more, basically 10 basis points or more, that's good enough for us to be able to participate in the next signal that's available. That means there's enough movement. Because remember, we are looking just for 5 points of profit. And if we got a 25-point range, we have a very reasonable chance of hitting that target. All right. So the whole indicator has been totally revamped to allow you unbelievable amount of flexibility. First of all, all the volatility settings have been dropped down right after the setup settings, right? So that you can just control everything really, really easily from here, right? And the average look back, 10 bars. You can, the candle volatility mode is designed specifically just to see if we want to trade the candle. If the candle is a super, super large candle, maybe we want to pass up on it because we're always, we're only giving ourselves 15 points of stop. If the candle is a 100-point candle, we can get retraced out of it. So here in this candle volatility mode, I basically set it to ticks and 160 ticks, which is, I believe, 40 points. If the candle is 40 points or more, I'm probably going to pass up on it, and it's going to color my candle orange to let me know that it's a dangerous candle, right? On the other hand, and I can also choose it, by the way, I can choose to make it ticks or basis points. A basis point is just a way to normalize everything on a percentage basis. A basis point is 1/100th of 1%. 10 basis points is basically 25 points of NASDAQ. 10 basis points of gold is about $5. That's a generally good level of volatility for me that I want to be thinking about, right? Now, the really, really key thing here is this range volatility mode. You can do it either in ticks, where you can hard code it and say, I want the range to be 50 points or more before I want to take a trade, or I want the range to be X amount. I basically can normalize it by saying basis points. And this way, it will apply to any instrument I trade because it's going to normalize it in percentage terms. So in this particular case, I choose basis points. I can make it 10 over here for NASDAQ. Just say okay, and that's it. And now it's going to color my range. The range obviously is more than 10 basis points. It's 826 to 721. It's 100 points over here. And what I can do next is to choose my A setup and say setup requires minimum range. If I click this, it will automatically filter out anything that's dead money. Look at this. See, there's no signals here. There are no signals. There's a signal here, the signal here, winner, winner, chicken dinner. All the signals are in only ranges big enough for me to want to get interested. This is the range filter that we have been doing. This is the range filter, I think, that really, seals it for us if you want to kind of avoid getting churned and burned. Now, having said this, by the way, you can completely turn it off. You could say, just let me show you. If I turn this off, right? There's no range filter required. We have a whole bunch of signals here, like all these signals. Most of them were actually pretty good. In other words, we had enough volatility overnight to have actually made money on virtually every single trade. Winner, this is the same trade because it's just continuity. Winner, winner. This one is a loser. This one is a winner, winner, loser, winner. So you're obviously gonna hit a lot more losers, but you're also gonna get a lot more frequent trades. So if you're in the mode of like, I don't care, I'd rather do frequent trades because my net expectancy is still gonna be positive, you can just take the range off. But if you want to be super, super, super selective on your trades, the difference is here. Without a range, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I have 15 signals over the past 90 minutes, right? With range turned on requires minimum range, right? I have 1, 2, 3, 4. I have 4, right? It eliminated virtually all the signals because the range was very, very flat. So choice is yours, but the point is, a great way of using it, in my opinion, is be promiscuous. Like go trade. You hit 2 losers in a row, like it starts to get really, really churny, and you're just hitting 2 losers in a row, turn on the filter. Then at least you're not going to re-engage with the market until the market really changes the environment. In other words, trade within a tight environment if you're making money until it just gets so tight that you stop losing money. But then you can just turn the range filter, and then you're not re-engaging with the market. Like, one of the things that happened, for example, on Friday is things just died at 2 o'clock in the afternoon completely. They just died so badly that nothing moved. And it didn't move for like an hour and a half. And if you were trading that range, you got stopped out like 3 or 4 times in a row. If you just after the second stop out, you just turn on the range filter, you would have not had any signals until 3:30 when the market started to move. You have been in great shape. So you can use it one way, the other way, both ways. It becomes super, super easy to kind of trade it any way you like. I hope you guys like it. Let me have some responses. I want to hear you guys telling me what you guys like. What does it mean, narrow scrolling ad better than the static white one? Oh, you're talking about, sorry, you like the one on the bottom? Is that what you're saying, Ben? You like the little scroller because it doesn't, that's what I thought too. It's like it doesn't kind of obscure the it gives us better field of vision, right? Right. So you missed, what does the range filter look like? Right here. This is the range filter. The range filter just basically right now, sorry, this is just showing you the range. This is just marking the range. The range filter over here basically can be expressed either in ticks or basis points. And if it's expressed in basis points, which is what I choose it for, I choose it for basis points, and I choose 10 basis points. It's basically what you're saying to the indicator is only give me A signals or B, or give me A. This is really designed for A signals. Only give me A signals if the range is big enough to beat my minimum requirement, which is 10 basis points, which is 25 points from high to low. Obviously, we're way above that, right? We're way above that. So there should be plenty of signals for us with a thing. Now, my whole point to you guys is we can trade this without range. We can trade it very, very, see, right now I have it turned off, right? Color, setup requires minimum range. I can just turn it off and just trade any signal that comes up to us until we hit a couple of losers in a row. If we hit a couple of losers in a row, that is the market's communication telling you we're dying. There's no continuity, right? There's no continuity. Then you can go and say, hey, now I don't want to see any signal until we finally get wide enough, until we get wide enough from high to low that I want to participate again. It's just an incredibly useful area. The shaded area is just the last 10 candles high to low. This is just telling you visualization. This is what the range is now. The range is massive. The range is basically almost 100 points. We're well within our parameters of trading, right? We're looking to make 5 points in a range that's 100 points wide. That's the field of battle. Think about this as a field of battle, right? The field of battle is big. That means we're just looking for a tiny little piece of that battle. We should be able to capture it. Oh, you know what? I gotta hang on, guys. I gotta actually turn on my trade of it because I'm not even set up to trade. Okay. MNQ. I want to trade one. I want to trade gold, and and the thing is, what's cool about this is we can trade both, gold and Nasdaq here, because if we get clipped, if we get clipped like in gold, we can just simply wait until the range really makes it amenable, right? So by the way, let's take a look at gold. Let's see if gold has any possibilities. So remember, here in gold, I don't have the range turned on right now, right? But if I wanted to turn on the range in gold, right? If I did this, you'll see that a lot of these setups are going to disappear. Some of them are going to disappear, right? And it tells you right over here in the table exactly, what this is 6 points in range. The minimum that we're looking for is 10 basis points, which is just 5, actually 4.5, right? Maybe I actually fool around that. I think for gold, because gold is such a ooh, look at that move. What the fuck? Holy shit! It was a $10 move. What happened here? Do we have some news? This looks like we got some news, guys. What happened to gold? Or is it just some bullshit gold price action? Do we have some news here? 10-year high of day. Key events. The 10-year spike, did that took gold out? No, it looked like it was just a sweep. Somebody just swept the hell out of this thing. There was just a quake in Japan? Really? Stacy, it's a 5-point, 15-point. $1, $3 in gold, 10 ticks, 30 ticks in gold, 20 ticks, 60 ticks in Nasdaq is what we're using. Oh, okay. So that was the reaction of gold because there was an earthquake in Japan. Okay. All right. Let's see. Let's see what happens here. Gold is really volatile. So we could actually, if I wanted to, I could actually increase the minimum range to maybe even 12 basis points, and it'll still stay because this is a huge range here. It's a huge range of possibilities. Let's see what Nasdaq is doing. Nasdaq range has come down a little bit, right? But you can see it's 23 basis points. It's well above. You see how it's giving you this readout information? Giving you this readout information? Really valuable stuff, right? Wow, 7.6 magnitude. That is not small. Where? How come I don't see it on the news? Let's go to headlines. Tsunami 40 centimeters reaches Japan's port. Hazardous tsunami waves from the earthquake and possibly 100 kilometers within of the epicenter along the coast of Japan and Russia. Russia to limit gold bullion exports. Oh, maybe that was the other thing. Russia to limit gold bullion exports. They've been in the nuclear power plant. Okay. Huh. All right. So fortunately, hopefully it won't be too. There won't be hopefully much catastrophe. They seem to be pretty well prepared for it. Okay. Let's see what gold is doing. So far, I have no setups anywhere. But gold might gold might give us a double dot trade here if this thing comes down, and that's certainly worthwhile for us because it's within range, right? The range is really big, so we could see if we could trade it. Nope, unfortunately, it didn't give it to us and then drop right afterwards. That's the occupational hazard. Like this would have been a great trade if it just gave us a signal because it dropped right away. But now we just have to stay patient. Maybe the next one will be double dot format. I'm actually surprised, honestly, that gold is kind of weak ahead of the Fed. Maybe they think the Fed is going to be more hawkish than it lets on. You see how the range, by the way, is contracting down to like 16 basis points, just only 46 points. It's already losing a lot of its oomph. That tells us to be careful. Like, in other words, we're still within our zone, but like now we don't have to nearly. We can see the volatility is compressing a little bit, right? Let me know if you guys are able to download the indicator and get it. For those of you guys that want the indicator, join my coaching and you get it. I'm going to put this over here. Coaching is every Thursday night. So if you join now, you're obviously going to be able to get into the coaching and you'll get the indicator. You'll be able to trade with us with the latest and the greatest version of this indicator that I've given you. Right, I'm watching to see if gold is going to give me a double dot formation. 18, 19 seconds left. Needs to break the lows in order for us to trade the dot. Nope. No trade in gold. No setups today. Just no setups. All right, let's see if NAS wants to rally a little bit. Double dot on NAS here. 48 seconds left. We'll play it if we can get it. $22 seconds left. Just going to stay patient because a lot of times it fakes us out. I'm going to wait till about 3 seconds before I'm going to be a buyer in NASDAQ. 3, 2, 1. All right, long. Wait, why am I not? What's going on? Wait, what? We got done. Why is this not showing? Oh, I'm in replay trading. Ugh. Oh man. I'm sorry, guys. I was in replay trading. Let me show you. Okay, it all got done, but I didn't show. Let me show the execution marks. So we got long 66. Why did I get out of 61? Oh, that's right. That's right. 66 to 71 is 5. That's correct. So we got done very, very quickly on that move. Did you guys, anybody trade that with me? Anybody got done on that? Give me a yes in the chat room, please. Let all these other people know that that I'm not the only one trading. BT, nice job. Anybody else? Neil? Good job, guys. Anybody else? Cheryl? Cheryl, how you like the new vol filter? Pretty cool, right? Let's see what gold is doing. Gold is doing nothing. Although look at the range in gold though. It's 59 basis points. Gold is an insane range. Well, this is going to fall off over the next couple of candles. It's going to get a little bit more regular. You didn't have the green slope? I thought we did because it showed up the. Oh, you're right. You're right. It didn't. It didn't. That's why I didn't show up the A setup over here. But I took it. You're right. You're right. It really wasn't kind of a legit setup, but as always, better to be lucky than good, right? Nice job, OTR trader. I'm glad you're doing well. Good morning. I'm glad you're doing well. All right. See, we're churning now. Like this is, you can literally see it, dying on the vine. Gold is extending though. Gold is really extending. A double dot red here, definitely a sell horse. It's really interesting that gold is so negative. Why is gold negative? What was the big reversal on gold? I'm trying to understand why earthquake in Japan would create negative flows on gold. Something else must be happening. It doesn't make sense as to why that would be negative. 32 seconds left on this. So make sure I'm in the right account. I am. 15 seconds left on gold. We'll trade gold here. Legit signal. Very large range, double reds. All right, short gold. And we're done. In and out, just like the burger place. Yes, my strategy on rotating accounts is very much to move around in the accounts, and that's frankly the strategy that I'll be using. Today I really wanted to showcase the range filter. The range filter is obviously only available on TradingView. We're going to update wealth charts when we can, maybe by the end of this week. I think this is really like a really good final completion of the strategy. And no, my take profit is always fixed at 5. It depends. It's not dynamic. I keep it very simple. 5 points Nasdaq dollar gold. 5 points Nasdaq dollar gold. I make donuts every day. That's what it is. We keep it simple, keep it plain, keep it uniform. I don't try to get fancy. If you're trading directionally and you want to trade half in, trail the rest of it for 1,000 points, be my guest. That's a great way of trading. If you have the personality and the capability to do that, this strategy gives you so many opportunities to do that well. You could have taken the first A cross over here, trade it for half, whatever, held it to above the highs and trailed it all the way down. I don't have the patience to do any of that, but it's certainly possible with this strategy. All right, Ben, maybe we're going to get a double dot breakout over here on Nasdaq seems to be consolidating underneath the 25.7. Still dicking around, in my opinion. The range is actually, I'm looking for a 12 bip range, and it's still within that range. See, it's green. It's telling you that the range is good. If it was under the range, it would go orange. Meaning under my minimum requirement, press. You see. You're not seeing the same purple candles because what you need to do, Jerry, is click show pull away trade. Just click that, and then you'll see the pull away candles. Okay, let me know if you got that. Yeah, I really hope everything is okay in Japan. But they have such great building codes that they really can withstand so much more than than any other nation because they're so used to earthquakes. But hopefully it's okay. Let me see if there's any more news on it. No issues at Fukushima. It's not a lot of Not a lot of like coverage of the Japanese thing. I guess it's also middle of the night. Triggers tsunami alert. That's it. No issues. Yeah, I mean the market is kind of, I guess, vibing this is not a, as a problem, but not a macro event because they have it under control. No double dot signal on neither way, nor up nor down, right? So we're sort of keeping us out of trouble for now on NAS. Nothing really. We can't take this trade on gold because much as we like the fact that it's a double dot trade, the slope is still negative. Gold really has not stabilized and shown positive slope, so it's not gonna generate an A setup for us because A setup requires positive green slope along with everything else. As you can see, even the candle itself is fading strength, so we're not getting the move yet. But what's interesting is you can see also, by the way, when you look at the range block, it makes it very, very easy to see support levels, right? Because look how cool this shows you. There's clearly support around the 4,200, right? 4,204, and we'll see if how much further they want to probe it. Because if they keep the support, they're going to try and rally it back up the other way. Jerry, were you able to get it? Yours is clicked. Okay, then Jerry, you probably have some other indicator on the charts. Oh, I know why, Jerry. Okay, the other thing you need to get rid of, you probably have. Okay, so when you go into label direction, every one of these label directions should be marked off to off. By the way, in the new version, if you download the new version, they are by default set to off, so they're never going to interfere. So neither the Christmas tree labels or the pause trade labels, which are completely different trade setups that you guys can explore in my BFF course, should be visible. And when you don't have that, then I don't know. Send me a screenshot of what you got. I don't know what there's something in your parameters that's not normative, and that's probably what's causing it. William is asking, do you have 2 accounts? Does it work with rotating accounts? 2 accounts is good, but the ideal number is 4. I think 4 accounts, you want to rotate 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. That really distributes your trades really nicely. As you can see, like, for example, let me give you the well charts. So we can look at well charts today. See, I have like 5 wealth charts accounts, and the distribution, across to them is what keeps everybody floating. Everybody, generally positive, which is what you want to do. So 1, 2, 3, 4, I think is fine. 6 is good. That's like the basic ideas where you want to be. Nasdaq probing the bottom for a little bit, but still not doing anything. Well, I'm glad you really like it, Clean Saber. You really like it. Clean Saber has been one of the best. But the Welsh is not around. Yes, because I have to. I'm going to be talking to Rob today, and we're going to try and put this new version, which I really wanted to clean up the version in TradingView, so that I don't have to go back and have him rewrite it 1,000 times. This is, I think, the final version of what we need as far as all the tool sets, the order line, everything else. So now I'm going to give it to the wealth charts guys, and hopefully they'll update this in the in its final version. Okay. So the other thing that's sometimes frustrating, and it's just, again, part of the process, is we are getting downward price action. We're just not getting it strong enough to give us signals. It's a drift. We're kind of drifting lower. Right now, I'm looking at NASDAQ. This is NASDAQ futures. Do you guys want me to? Hang on a second. Let me go into settings, canvas, ticker. You can see this is an MNQ, right? I'm trading NASDAQ, and then when I trade the gold, you know, I change the gold. This is the gold symbol. That's correct, William. You see, it's kind of like one step forward, one step backwards. We're just not getting a lot of continuity in either one of these things. And as these two candles are going to drop off, the range is going to get a little bit more narrow as we're watching it over here. Still within the zone, but obviously a lot slower. So this is our double bottom support. It's interesting to see if they want to break it or not. But if they hold it, maybe this is going to be a trade to the upside with dots forming a signal for us. We'll take a look. I don't think I have the filter on. Oh no, I do have a minimum range. I'm going to take it off just to stay really loose on the signals. But it doesn't really much matter because we're right now the range is wide enough that we don't even need the filter. It's still, all trades are good. William, these are not. These are all past accounts. Like these are all funded accounts. I'm trading funded accounts this way, very much so. This is like absolutely my preferred way of trading funded accounts. So none of these are blown. You blow the accounts when you're just going, you know, large size, large numbers. You blow one, try to win the other. But I don't do that. I don't do that in funded accounts. Wow, man. Markets feel like they have a lobotomy today, right? Look at this. No action. How many points are you taking out per trade, OTR? It sounds like you're just basically trading positionally. You hit a couple of really good trades, and that's why you're getting close to payout. Oh, a setup in NASDAQ possibly. I'm not looking at gold, Tracy. I'm looking at NASDAQ right now. Yeah. Oh, we missed the gold signal. Gold had a signal over here. It was a nice big turn in gold. We missed it, so we're not chasing it. Now we see if NASDAQ has a signal. NASDAQ has a signal. Sell. Why is this not showing on my thing here? Oh, damn. I'm in the wrong account. Ah, fuck. Never mind. Sorry. Okay, sorry. I hit gold instead of NASDAQ. Okay, so we sold NASDAQ and we got NASDAQ done. I'm sorry, guys. anyways, it always goes to do as I say, not as I do. Number one rule of Boris is streaming, because I'm always going to fuck up things in the background here. But it all worked. I mean, hopefully you guys hit the Nasdaq trade. That trade worked nicely. Anybody hit that? Ben, that was a clean setup. Yes, and gold. You guys hit them both. Good job. Good job. Good job. Good job. Nice job. I just have like I forgot I had 2 columns on the thing here, so it's kind of got crazy. But look. I mean, we're not doing a lot, but everything we're doing is a P&L product. Like I'm not even using the range. The range filter is active even without me using it, in the sense that the range is big enough. But it's I think it's just a really, really good structure, especially for when the markets die, especially when we go into the 1 o'clock to 2 o'clock area, or 2 o'clock to 3 o'clock area when it kind of dies. It's going to be really valuable during FOMC, because pre-FOMC usually nothing happens. That's I don't think we're even going to do a trade pre-FOMC. We're just gonna do the afternoon trade in FOMC, because it's just gonna be a waste of time. But this is the only thing that we really, really needed to help us. It's not that it's going to prevent every single bad trade. It's just going to prevent a whole series of bad trades, which is as good as you want the filter to be, right? It's going to just keep you out of, if the market is bullshit, you're just going to sit on the sidelines, not do any trades. And that's as good as, as anything. You only got 1 white dot in NQ. Stacey, are you on the 1 minute chart? Sounds like you got the wrong. Do you have dots only range zone as the indicator that you're working with? Do you have it on Trading View? Do you have it on 1 minute? If the answer is yes to those, then you should have all the indications. So we drifted to those 700 and then just kind of died out again. Not much going on over here. Gold was a great trade up here that we just, we were just looking at NASDAQ. Didn't get a chance to trade it, but it's fine. We worked it. Okay, send me a screenshot of what you're doing. I don't know, William. It's a question probably for coaching, so we'll save that for coaching. Come to coaching with me. I'll be happy to take a look at your account. When we do personal analysis and coaching, if you guys have issues, you can always come to me there. What do we say? No shade, no trade. You know what? Actually, I just realized. You know what would probably be useful is if this is a really good idea. This is like the last thing before I kind of hand it over to L charts. We can shade this thing green if it's positive shade. Oh, sorry guys, I missed the trade. I'm just thinking, so I'm not paying attention. This is a trade right here that you guys should have taken. Would have been easy trade. If you get into a trade late, just get out of it. That's the rule of thumb. If you're late, there's no trade. That's why you notice I didn't take the trade here. It was a trade right here. I was talking. I missed it. I don't care. But what I was thinking is this, would be really, really useful. I just realized this. Okay. If the range is tradable, meaning that it's, it meets our criteria of like whatever minimum range is, the color turns like green, right? And if the range is not tradable, the color stays orange because that stays consistent to these colors. Does that make sense? What do you guys think about that? Somebody give me some response on that. You guys like that idea? Yes, no? Miguel likes it. Claudia likes it. Anybody else? Let's go. I want to hear from everybody. You understand what I'm saying? If it's tradable range, this whole thing becomes like a light green. And if it's a non-tradable range, it becomes orange. I think that makes sense, right? Yeah, I'm gonna put that as a final piece of visual logic, because the cool thing about dots is that it's a purely visual tool. That's why it works so well. We're breaking down. Look at this. NAS finally breaking down to the downside nicely. Cheryl likes it. All right, cool. Peter likes it. Okay. Very cool, guys. Very cool. Very cool. All right. Everybody hit all the trades. I think we're 4 for 4 or 5 for 5. One of them, I obviously missed this one because I was yapping. There's a couple of them that I missed because I'm yapping as always. But having the tools now to make this all happen, I think it's really, really good. Okay. All right, guys, we're gonna finish up today. Tomorrow, triple trading, 9 to 10:30. Then the close, then Asia session, and then Wednesday mini marathon in the afternoon. We're gonna go from like 2 to 4:30. Hopefully, Jerome will be kind to us and we'll create some volatility and we'll be able to trade it. But with this new structure, you guys should be able to really, really fine tune the setups almost anywhere they go. All right, I'm going to make one final change on this with the green orange change on the range, and then we're going to send it off to Wealth Charts and get it going. Okay. Thank you very much, Clean Sabra. Nobody's ever said that I was a good teacher. I am like the least patient person in the world, but I really appreciate you saying so. Thank you, Miguel. Thanks everybody. All the newbies. Did you like the session? Did you like making money? Where are my newbies? All the newbies who came in at the beginning of this session, talk to me. Yes, no? All right, I'm gonna assume you guys all liked it. Okay, my friends, everybody have a wonderful day. It's definitely Christmas season in New York, man. 1,000 tourists, and you can't move anywhere. I hope you guys are all enjoying the season. You guys really, you're making me melt here. You're saying that I'm a good teacher, because I consider that to be like the hardest part of my job. But I'm glad you guys like it. What I'm trying to do, guys, honestly, is to make it to the point where I don't have to teach you. If it's visual, you'll understand it intuitively. I'm a very, very visual person. I need to understand things intuitively, and that's the best teaching. Like the tool should teach you yourself, right? I'm really striving for the Steve Jobs school of visual design, where it becomes intuitive to what you want to do. So thank you, guys. You guys are so kind. I really was not fishing for compliments, but I'll take them. Okay. All right. Hopefully we get a couple of setups. I'm going to color this green on the positives, orange on the negatives, and then we'll send it off to Wealth Charts and we'll be able to trade it. Okay, I love this. This is really radically improves the P&L accuracy of what we're doing. Right? You saw we had literally no losing trades today. So that's where I want to be. I want to be like I want to be 6 out of 7 every single day is where I want to be. All right, guys. Hasta la vista. I'll see you guys tomorrow. Thank you again for everything. What a great day. Take care. Bye-bye.